thank you for joining Joint Custody. My name is Ben Duve, former banking executive, central banker, and currently I'm the global head of partnerships of GK8. And with me is Tony. And Tony, maybe you do your full introduction yourself. I think probably many people know you. But for everyone who doesn't, just a brief introduction.
Sure, I'm Tony McLaughlin. I'm the CEO of a company called Ubyx, which is a clearing system for tokenized money. I'm sure we'll go into it later on. And also spent a significant chunk of my limited time on Earth working in banks.
So you are a new digital but true banker. Is that the right? And new, that's maybe then part of the next question as well, right?
Well, a complete banker is also Cockney rhyming slang, if you're familiar with that.
Yes.
So I'll leave that to, I'll leave that to others to decide. But yes, for my sins, I've done nothing except work in payments since 1993, and done every kind of payment system you can imagine. And for most of that time, Ben wasn't a sexy subject. Only really became a sexy subject because first of all fintech and then crypto, and now everyone's crazy about payments, so that's good.
Indeed. So that it immediately leads me to my question. How did you get into digital? What's your story there from that very traditional, let's say boring, pure payments play to a truly digital entrepreneur?
Yeah, look, I guess my first exposure was I read the Bitcoin white paper. Sadly, not that early. I read it in 2013, a few years after it came out. It blew the top off my head. It really did because I'd always assumed that money was an artifact of the nation state or emanated from the nation state. And the fact that the Bitcoin white paper articulated this vision of a monetary system which is not anchored in a sovereign really made me start thinking about what is money. Also in 2013, well, I attempted to send a chunk of money into Mt. Gox. The wire transfer was about to go, and Mt. Gox blew up before I had the chance to move the money in. So I guess that was my starting point. But
But that means you didn't buy enough. I just because that's why you still have to work because that point stopped you from buying Bitcoin at the right moment in time.
I didn't get a chance to buy any at that time. I can't remember what the price was, maybe $300 at the time. I don't remember in 2013. But to be honest with you, Ben, even if I bought it then, if I had doubled my money, I would have sold. So I would never have hodled all the way through till to now.
And
But nevertheless, for most of the years after that, the central bankers were very dismissive of Bitcoin, as you know. There were lots of
and they
articles.
invited me in, but yes, I've
Yeah.
heard the stories even from the inside.
Well, the central bankers said that Bitcoin didn't fulfill the famous three functions of money, and everything was, I guess, changed when Libra, raised its head, and then for the first time there was the prospect of really a non-sovereign central bank with its own currency coming into the world and living on digital networks. Um, Social media networks that at that time had 3 billion customers. And so that was then a clear and present danger for the central bank, for the central banks. Um, I was, again, working at Citibank at the time. I had a ringside seat of these developments. And immediately after Libra, the central banks decided that CBDC would be the answer, central bank digital currencies. So you have to understand, I'm working in a major US bank. I'm seeing the cryptocurrencies like Bitcoin that are not really being used for money. They're being turned into more like asset, kind of digital gold type of assets. I'm seeing these ideas for stablecoins being developed by non-banks. So you can imagine from a bank perspective, you don't like that. I'm seeing development of CBDC. Again, you can imagine from a bank perspective, they don't much like CBDC because they don't want money flowing out of their balance sheets. And so, my boss at the time said to me, he said, "Look, Tony, you don't like any of these alternatives. You better come up with something that you do like. You can't just keep on saying no to everything." And that's what got me thinking. And I started um, gathering my thoughts on this. And I said to myself, well, if this blockchain technology has got some special attributes, let's apply the essence of that technology into the fiat currency system. And so I came up with a concept called the Regulated Liability Network, which essentially is a shared ledger for CBDC stablecoins and, in particular, tokenized deposits. So I was definitely amongst the early proponents of tokenized deposits.
And I was at BNY at the time. RLN was a concept discussed quite a bit in the industry, indeed. Yes.
Yeah. So that became there was a proof of concept that we did in the US with the New York Fed Innovation Center and a bunch of banks. There were two phases of that. There were a few phases of it in the UK. Then it was the seed of the BIS Unified Ledger. I initiated the BIS IIF Project Agora, which brought together 7 central banks and 40 commercial banks. And that that attempt was really the question was, can we apply blockchain technology to upgrade the fiat currency system? Which, I mean, you have to laugh at the irony involved because Bitcoin wasn't invented to upgrade the fiat currency system. It was invented to be an alternative to the fiat currency system. So one of the things that I love about this space are the multiple ironies that keep on presenting themselves, and one of those ironies is stablecoin, because again, if you're a Bitcoin maximalist, stablecoin is a Frankenstein's monster. It's that's the idea that Bitcoin would be peer-to-peer payment system, and stable coins slaved to the fiat currency system and to the sovereign. That wasn't what was the original founding ideology of this whole space.
Indeed, right. It's an interesting one. And you already spend a bit of time on your time at Citi, RLN. So you basically, it looks like you slid into it a little bit. Like you didn't go there deliberately, but bit of bit, you read it, it became a topic. You took that momentum and made it your own. But I think also out of a necessity, it sounded like, because that was the topic City would have to look at, right? But then how did you jump out and how did you
Yeah.
then decide to do Ubyx? Because that's a different thing, being a corporate employee looking at a topic to starting your own.
It is, and those things were kind of forced, and also the move into Ubyx in a sense was forced because the environment changed with the US election. You see, before the US election, the US regulators had a big keep off the grass sign placed on public permissionless blockchains. It wasn't possible for regulated institutions to do much on public permissionless blockchains. After the US election in November 2024, it became obvious, blindingly obvious to me, that going forward, banks would have to be allowed to play on these new venues. And the reason for that was stablecoins, because stablecoins live on these venues, live in these blockchains, public permissionless blockchains. And it would be intolerable for there to be a stablecoin bill passed where non-banks were able to participate in these networks, but banks would not be able to participate in these networks. And so I think that thesis has been borne out since then. We've seen the keep off the grass sign hasn't been entirely removed. And even if you remove the keep off the grass sign, there's a muscle memory in the banks which makes them very nervous about using public permissionless blockchains. But to me, it's it was relatively obvious in November 2024 that private permissioned ledgers were a dead end because banks in the future would be able to use more public permissionless networks.
Well, the question around the private permission versus public, that's still a big debate. I mean, we see a few ones still around which are truly private, then they're semi-private, then it's a network on top of a public blockchain, which I think again looks private. I look at it also from a capital markets perspective, where it actually fragments liquidity, right? There again, the question comes up, either you have one for all, or you
Yeah.
truly have a huge fragmentation of liquidity, which is not a payments topic, but it's also related because in payments you want to reach everyone, right? The network is the value of the whole thing.
Yeah, it is. But look, I think the reality came home to even to the providers of the private permissioned ledgers. So we've seen the pivot that Canton has taken. We've seen the pivot that Corda took or R3 took. And these are, I think, an acceptance that there just isn't a business model to sell on enterprise software, private permissioned ledgers, which I can't think of a single one of them that scaled to any size.
I think maybe they couldn't. They did collect a lot of funding, so at least they have the funding base for the next round. That's what it looks like to me. But maybe, I mean, I could have this discussion now for the rest of the podcast, but we're
Yeah.
here to discuss Ubix and your specific piece. So let me ask you the following: for people who are not familiar with Ubix, and you touched on Ubix already a little bit, what's Ubix and what
Yeah.
does it solve for stablecoins? And what does it actually mean in practice, right? Because there might be practitioners listening in, and you have a great way of explaining the old and the new world, or sorry, marketing people in my one of my old posts told me to say the traditional and the new world, right?
Yes.
And maybe that's a great one, right? So what does it solve for? What does it mean for stablecoins, and how to compare that to today?
Yeah. Okay. So I think a good starting point is to say what is a stable coin. And, there's lots of industry debate about it. People will jump into algorithmic versus fiat backed. What's the reserve? Blah, blah, blah. This is not the comparison I think is interesting. Um, what I like to go back to is an ancient instrument called a negotiable instrument. Now, what is a negotiable instrument? So, Ben, you give me $10 and I write on a piece of paper, I owe the bearer of this piece of paper $10 payable on demand. And I give you that I put the $10 in my pocket and I give you the piece of paper. Now, what you're holding in your hand is a negotiable instrument. Now, what do I mean by that? Now we have to think about, like, who am I? I'm the issuer. I have issued that piece of paper. The $10 in my pocket are the reserves. I hope you see the parallels building up to stablecoins.
Yes.
The $10 in my pocket are the reserves. The piece of paper is the token. You're the token holder. Now, what can you do with that piece of paper? You can come back to me and say, Tony, give me my $10 back. You've got counterparty risk against me because I might have spent that $10 on, I don't know what you can buy with $10 these days, half a cheeseburger. So anyway, I've bought something with it, so I don't have the money anymore. I default, the issuer defaults. But let's say that I do have the money, I give you the money back. Okay, that's one way you can off ramp is to get your money back from the issuer. The other way that you can off ramp is I'm nowhere to be seen. But you meet a mutual friend. Our mutual friend is Betty, and you say to Betty, "Hey Betty, Tony owes me $10. Here's the piece of paper. I need $10." If I give you the piece of paper, then Tony will give you the $10 later on when he comes back from his lunch. Now Betty says, Ben, I like you and I like Tony, but I'm not so sure that Tony's going to pay up. Here's what I'm going to do.
I remember that for the next lunch we have. I'm just gonna
Right.
remember that. Yeah.
I'm willing to give you $9. So if you accept $9, what's happened is you have traded an instrument with a face value of $10 for $9. You've taken a $1 discount. Betty and you have negotiated. The instrument has been discounted. So you get $9 and you go off and you're happy because you needed the money. Then Betty has got the piece of paper. And then later on, Betty comes back to me and I pay her the $10. Betty has made $1. Now here's the key thing. I mean, I hope that the parallels to stablecoins are obvious, but here's the key thing. Is is that instrument, would it have been any different if I had um, carved I owe you $10 into a block of marble? It would not. Is it any different if I etch it into a piece of metal? It is not. Is it any different if I write it into a relational database? It is not. Is it any different if I do it as a token on a blockchain? It is not. Is it any different if I entangle it into a crystal using lasers? It is not. So something very important, which is there are these things called promises to pay, called negotiable instruments. And by the way, they exist all over the universe. Wherever there is advanced intelligent life, there are promises to pay. You know, if the people who believe in UFOs are correct and a UFO lands beside the Washington Monument, you better believe that spacecraft was not paid for in cash. You know, any civilization sufficiently advanced to build a spaceship has also developed a financial system, and that financial system is built on debt. So the first spaceship that lands here is probably on some sort of hire purchase agreement. So debt instruments are ubiquitous, and it doesn't really matter if they're written on paper, marble, holograms, or blockchains. Now, when you understand that that's something eternal and universal, the next thing to understand is that these types of instruments have to exist in a particular market structure. What is that market structure? There are many issuers and there are many possible receivers. Now, whenever you've got a many-to-many network, there are two ways of resolving that network, Ben. One way is bilaterally. Everyone is connected to everyone else. If you resolve the network in that way, the number of connections is A times B. Or you can have a clearing system in the middle, and that clearing system means that the number of connections is A plus B. So what is true in check clearing? There's a clearing system. What is true in ACH? There's a clearing system. What is true in Visa and credit cards? There's a clearing system. What must be true in tokenized money is there's a clearing system. So the space that Ubyx is occupying will be filled. The only question is, will it be filled by Ubyx or someone else?
So how does it help now? If I know we have this problem, we want to solve it,
Yeah.
you will solve it for me. Who you will solve it for? Maybe that's also another
Okay.
question, right? It's not for me as Ben, right? But it's probably for someone else.
But it's also for you as Ben, but let's go through the parties. Okay, so let's begin with the stablecoin issuer. So if you're an issuer, let's analogize this to cards. If you're an issuer of a credit card, Ben, does it make sense for you to go around the entire world and sign up every merchant to your credit to accept your credit card yourself? No, impossible.
No, no, true.
So if you're a stablecoin issuer, does it make sense that you go around the world and sign up every exchange and every bank and every fintech by yourself? No, impossible, ridiculous. The issuers, the stablecoin issuers that try to build their own proprietary network, what will they look like in the end? Even if they are successful, they will look like Diners Club or Discover or American Express. That's a single issuer with its own proprietary network. Now, those can be valuable properties, but they're not as valuable as the many-to-many network, Visa or MasterCard. They're not as valuable. So, number one is the issuer. The issuer's problem is I want to join a mutualized acceptance network. So, this is the issuer. What about the receiver? Let's say that you are a bank in, pick a country, a bank in Malaysia, and you want to offer your customers a way to receive lots of different forms of tokenized money. Can you do a bilateral deal with every issuer? No, you cannot, because there are going to be thousands of issuers.
Agreed.
So the issuer cannot do bilateral deals. The receiver cannot do bilateral deals. And the benefit of the clearing system is, and this is something that is super important. Again, analogizing it to a card. Who do you bank with? I'm not going to ask you for your account number, Ben, but who do you bank with?
With my old employer, Commerce Bank, of course.
Okay, Commerce Bank. Do you have a credit card or a debit card with Commerce
Yes.
Bank? Okay. You walk into a hotel in Tokyo. This is super important question. Does that hotel in Tokyo, when you pay, do they care about the balance sheet of Commerce Bank?
No,
Do they give a damn about Commerce Bank?
probably not.
So, in other words, where we've got to with cards is the accepting party does not care about the issuer, never mind their balance sheet. Now, bring this back now into the world of stablecoins today. The only thing that people can talk about when it comes to stablecoins is the issuer's balance sheet.
Yes,
This is ridiculous. This is
agreed.
nonsensical. This is a moment in time. Believe it or not, there will come a time soon where the issuer's balance sheet doesn't matter because everyone is going to meet a minimum standard set by the regulator. Now, the reason why everyone talks about the issuer balance sheet at the moment, maybe it's warranted because we haven't set those minimum standards yet. But once those minimum standards are set, the issuer's balance sheet will not matter. And another thing that is a function is a feature of stablecoins today. There are some issuers who believe that distribution is their moat. Now, again, think about Commerzbank and their credit card. Commerzbank probably have a very profitable credit card. Is proprietary acceptance of their credit card their moat? Ridiculous. Not
Agreed.
so. So we are again, believe it or not, but we're going to the stablecoin tokenized money market structure is going to evolve to resemble the same kind of features that we have in cards.
But then if I understand you correctly, if enough people chose Ubix and assume you help them in those transactions, you directly compete with me, the MasterCard.
Not well, we don't do cards.
Well,
We do
but you,
the
with their
new form
mode,
factor.
meaning you can go everywhere with the means of payments and get acceptance, irrespective of where I'm from.
Well, let's think about this. Let's think about you and I go into and I hope we do this someday. We go into a great restaurant in Tokyo. We have a fine meal of sushi. At the end of that meal, because you're a very generous guy and I'm Scottish, you pay. Now, when you put your card down and pay for that meal in Japan, it's going to be a lot of money, by the way. It's going to be hundreds and hundreds of dollars. I'm warning you now because I'm going to drink the good sake and the good wines.
Sounds
But
good.
the amazing thing is that when you pay Um, your card is goes to a terminal and it sends a message through the card scheme to the issuer, to Commerzbank. And what do Commerzbank send back? Just an authorization. They just say Ben is good for the money. But you and I walk out of that restaurant and the restaurant hasn't been paid. Now, the restaurant is going to get their money maybe in a couple of days' time, and they're going to pay, let's say, 2 or 3% for the benefit of receiving the payment. Now, that's the current way of doing things. Imagine a different scenario where you and I walk into that restaurant, and when it comes time to pay, you pull out your GK8 wallet and it has some stable coins on that wallet. And the restaurant you give you the point of sale device and you tap your phone. What happens? The phone detects your NFC and sends a request for payment into your GKA wallet. You approve the payment. You've got some stable coins on some network. The stable coins are transmitted across that blockchain to the merchant's wallet. The point of sale device is listening to the blockchain. Once it gets the confirmation, the sale is registered. Now, that interaction has the potential to dramatically reduce the cost for dramatically reduce the cost for the merchant, but also the merchant is paid immediately. Now, whether that is a direct competition to Visa or MasterCard or cards, I leave that to your own judgment. But those types of interactions with stablecoins are perfectly possible and I believe should be allowed to compete with the existing rails. And I believe if they are allowed to compete with existing rails on a fair, equal basis, then they will capture their fair market share.
So let me ask you this as we have 2 or 3 minutes left, right? So I heard this. Now I'm excited. Who should I be to come to you and how will you help me? And maybe make it a little short, right? To also give people the ability to either interact with you more. I think you do a lot of workshops, but also how could Ubyx then help me? And if you had to pick, that's your market, right? That's what we always ask. Who do you cater to?
Okay.
Who do you solution for? Maybe
If,
that's a little bit as well to get it more precise at the end for people.
if you are a stablecoin issuer, we're building for you a mutualized acceptance network. If you are a bank or a fintech and you're wondering what your stablecoins or tokenized money strategy should be for either stablecoins or tokenized deposits, we can help you make foreign exchange from receiving foreign stablecoins. We can also help you service your corporate customers with your tokenized deposits. And we can help you with the wallet infrastructure in partnership with beautiful friends like GK8 to enable you to participate in this world of tokens and chains. Because the first thing that every bank and fintech needs is a wallet. Every bank
Agreed.
and fintech on the planet needs a wallet, right?
Agreed.
If you're a central bank and you're concerned about the circulation of foreign stablecoins in your lands, then we have, I think, a great recommendation for you, which is catch these stablecoins in wallets provided by your regulated financial system and convert them into local currency. So we also have an answer for the central banks. And if you are a chain and you want to connect to traditional finance is going to adopt tokens and chains. But the current way, I end with this comment, the current way in which the chains go to market with the banks, for example, I believe can be augmented. I was on the receiving side of this when I was in my previous employer. Every chain would come to me and say, I'm the best chain.
Yeah.
Now,
That was this. We saw for everything and just the newest hype we heard about last week, we also saw for.
but here's the thing, if you choose the right wallet, the right wallet will be connected to many chains. And to be honest with you, the most important thing for the chain is to get through the door. So much better we much better the messaging that we give to the banks is this: look, for the time being, you can be relatively chain agnostic, but you need a wallet, and that wallet needs to be multi-chain. And once a bank or a fintech has equipped itself with a multi-chain wallet, for example, from GK8, it has future-proofed itself for this new world. And that's the first thing that any bank or fintech around the world should do is not issue anything. The first thing to do is to get a wallet.
Agreed. And then plug in with you to then be able to participate in a beautiful world of stablecoin and tokenized deposit. We didn't even get to a deep dive onto that very interesting topic. Maybe we do it another time.
For
So, from
sure.
my perspective, Tony, thanks for joining. It's always delightful to talk to you. It's always a good learning process. I always have a new aspect, even though I heard this spiel a few times already before. There's always a new aspect to learn. And the last one is, are you having one of those famous workshops anywhere soon so people might be able to join up, or do they just follow you on LinkedIn to learn about it?
People can follow me on LinkedIn. If anyone listening would like me to show up in some nice destination and do one of my infamous whiteboarding sessions, I'll be happy to accommodate. If there are any, again, senior, bank executives, I've done a number of sessions for bank excos and boards. There's lots of confusion and noise out there about stablecoin and tokenized money strategy. What I do is I describe the game from above. Before you decide how to play your cards, you have to understand the game from above. And that's something that I very, very much enjoyed delivering that presentation in front of a whiteboard.
I'm sure a few people will listen and pick you up on it. Thank you for joining, Tony. Thank you, everyone, for listening in to Join Custody, and hope to see you next time again and see you soon.